always try to become the proactive, not the reactor. We don't react, we try to provide proactive solution to the government. So that's why when SEBI has come out this concept paper and they are asking comments, so that's why we are focusing on concept paper program more, so we can get the view, we can discuss, we can identify what are the issues. So when the law is becoming the complete, or when they will go for implementation, that time we should not think that this is missing or that particular point is missing. So SEBI has issued this consultative paper on February 7th, proposing amendment to LODR regulation concerning the Secretarial Compliance Report, Auditor appointment and related party transaction. These are the three things they have changed. So in the proposed related to Auditor, they are doing strengthening the Secretarial Compliance Report. Then they are bringing out eligibility criteria for appointment of statutory auditor, and then disclosure for auditor appointment and reappointment. Now, in this case, they have earlier these guidelines and these things were in place for the statutory auditor of accounts and finance, but secretarial auditor was not part of this. Now they want to make it same, and they want to bring out the approval of the various board and audit committee board and the shareholders. So today we all will discuss, and simultaneously they have made it compulsory for compliance of secretarial standard also for the listed company. So today we will discuss these all things in detail. And in second part, the proposed related party transaction, they are saying simplifying RPT approvals for subsidiary and the clarification of the applicability RPT regulation, because these are some issues which were always having some problem. So today's objective of webinar, as I told you in the beginning, we want to deliberate the proposed amendment as well as gather suggestions and comment of on this consultative paper. And following in-depth discussion during this session, along with we'll do the poll also. So with this, whatever suggestion, whatever I'm understanding, whatever confusion will come through the learned speakers and the poll and the questions of various participants, we will make a combined suggestions to SEBI with this. So I request all the participants to wherever they have any confusion, they have a issue, please write and ask questions. So we will try to cover. Suppose when we are giving answer and answer is having a multiple things, so that we can make it that the more clarity is required in the law. So I welcome all my learned speaker today. First, I will welcome Madam Aruna. She is Company Secretary and Compliance Officer of State Bank of India. She has over 17 years of experience in secretarial practice, corporate governance, banking, financial, credit analysis, and corporate compliance and related functions. I welcome Aruna Madam for this program. You have come first time to our webinar, and I hope your experience, rich experience, will help everyone to understand. And being the biggest Bank of India, your perspective or your perspective with so many companies also will give a new direction. Thank you very much.
Thank you, sir. And thank you for your invite. And also, I appreciate, and we all of the same fraternity, I appreciate your these corporate professionals' efforts, continuous proactive, just like you said, proactive efforts for the making the compliance culture. And it's so fast that once consultation paper comes, or wherever there is a change in LODR, you are there to support, and you are there to provide the clarification and redress or answer all the queries of the students, professionals, and maybe it will be regulators as such also. So it's a really appreciable. Thank you very much, sir.
Thank you, madam. Thank you. Then we have Amit Gupta. He's a practicing company secretary and insolvency professional, having a wide experience of this. And because Amit is also a practicing company secretary, so it will be helpful to get his view. Then we have Mr. K.S. Ravichandran, Managing Partner at KSR and Company, Coimbatore, Company Secretary and LP. He is one of the finest Company Secretary of India, practicing Company Secretary. And recently he won the Best Company Secretary Firm Award also from Institute of Company Secretary. I welcome Amit and KSR just joining. He is in the one case and he is joining. Then we have Ankit Singri, Head Corporate Affairs and Compliances, and Nitesh Ratwal, Associate. He's also managing the corporate compliance work in corporate profession. So I welcome Amit and Ankit and Nitesh for this program. So friends, as you are aware that we are continuously doing program, and I just want to inform you that our next webinar on 21st February will be on direct tax code. Whatever what the new code has placed in the parliament, we want to discuss that what is this code, what are there, though it has gone to committee, select committee, but we want to discuss and we want to bring out the best brain of India on this. They will discuss these aspects. Friends, as I told you, the entire today's discussion will be divided into 4 parts. One is strengthening the secretarial compliance report. That is one. Then statutory audit of listed entity. Then disclosure to the audit committee, board of directors, shareholder of the time of appointment, reappointment, and then RPT issues. Now the question is that why these amendments are required. So first is the Secretarial Compliance Report, which is a part of the Secretarial Audit Report, and it is focusing more on the securities law. That is one part. And in this report, there are so many things as found out by SEBI, that inconsistency in reporting. Then reporting standard were varying significantly across different companies, leading to ambiguity and inconsistency. Then accountability in this SCRA framework, direct accountability to company secretary and independent professional were missing. So SEBI wants to put more responsibility on secretarial auditor. Then undetected regulatory violation, because sometimes so many non-violation were there in SCRA, and that is a gap. So they want to fill up this. So these are the some weakness. And then issue with the auditor appointment and independence. That is another aspects. Why for that they have brought out. There was a concern over auditors' independence. Like we have seen ILFS, DHFL, Yes Bank. It was highlighted the conflict of interest between auditor and companies. And NAFRA is also taking so many action nowadays on various auditors. Then SEBI has observed that auditor often fail to report financial irregularities due to long-standing relationship with the companies or their incompetency, both because sometimes they are not doing intentionally, but they are not capable also. So they have brought out one format which I'll discuss with you. The lack of disclosure in auditor appointment. Companies do not provide detailed disclosure why the particular auditor is appointed or reappointed. So now they want to tell him that why they are appointing this person, whether he has a sufficient experience or not. Then shareholder and investor lacks visibility into auditor selection process, because what is happening, the management is appointing, and this was a I think auditor they have done, but secretarial auditor they have not done. So always this was the issue that secretarial auditor who is equivalent to the statutory auditor, but his appointment was on the management, and if you are not following management guidance, they can remove it. So that's why they have brought out that shareholders should also involve. And when you are and then they are making a disclosure format also. So it is now very tough that you can remove anybody just for the sake that you don't like his face. That's why you're removing. Then need of enhanced qualification criteria, because sometimes this is happening that company is very big and the experience of the secretarial auditor is less, and they have no infrastructure also to handle this. They want to do that analysis also. So SEBI proposed a strict eligibility criteria, ensure that only competent and conflict-free auditors should be appointed. Now, in the what will be the impact of this amendment? So first is Secretarial Compliance Report. More stringent compliance checks will be there. Higher accountability will be there because they are directly responsible. Increase scrutiny of their work, ensure better disclosure because today they are submitting report, but today then they will realize that everybody can check and comment, and improve corporate governance and investor compliance confidence also, and that ensure that investor, regulator, and stakeholder get a more transparent compliance report. Now, this is Secretarial Compliance Report, but what will be the impact on auditors appointment and the appointment which is there and which they are proposing is stronger independence of auditor, restriction on conflict. Auditor appointment will ensure better financial reporting, more transparent selection process. Listed company will have to disclose why they are appointing a specific auditor and provide detail of their qualification and prior experience and their infrastructure also, and reduce in fraud and financial manipulation. With a stronger selection process, company will find it harder to influence auditor to hide financial irregularities. These will the impact will take place. Now, what will be the impact of RPT which they have modifying? One is easier compliance for subsidiary companies. That is a need, and then the industry was demanding this. And companies will get relaxation in approval process for transaction between parent company and the wholly owned subsidiary, because wholly owned subsidiary is equivalent to the listed company. There is no whatever benefit wholly owned subsidiary will get, it is going to directly to the main company. So you can't make it these company on the same parlance or other subsidiary company. You have to give more relaxation. Elimination of ambiguity, that is also there, and clear definition on which RPT require approval will prevent legal and regulatory dispute also, because that is also very clear. Now, last point is that by doing all these things, what advantage of these changes for secretarial auditor and companies? So first, I will cover this, what the secretarial auditor will get. One is increased professional credibility. One is when they will do this, all these things, they have to more authoritative role will be there. They will be more focused. Their work will gain more significance in corporate governance framework, because today you are not reporting to the management, you are reporting to the shareholders. Then higher demand of secretarial audit service, because in my opinion, today this is a secretarial audit service, but I remember when I was president of Institute of Company Secretary in 2003, we came out with securities audit report, and where we mentioned that all securities related law audit should be there. Now, SEBI has prescribed this, clarified this, but even there are some scope. There are so many laws in the securities law which is applicable to the company. When we will discuss, I will suggest what changes we'll do. And this will be a higher demand for listed companies. They will ask for secretarial audit services in a different manner. Those who are, because we should understand secretarial audit service for company law and secretarial compliance service which SEBI is doing for security law, it is two different things. One person can be expert in company law compliance, but securities law compliance is not a baby job. It's a very, very complicated, very niche area. So everybody cannot do. For that, you have to understand takeover law. You have to understand various other things which you have to follow, LODR, ICDR, various things. And then responsibility will be well defined. That is the advantage secretarial auditor will take. For company's point of view, when they will do this, stronger governance and risk management will be there. Investor trust and market reputation will go up because they are hiring good company, because whenever you are going for a public issue, the investor and everybody is asking, who is your auditor? And the auditor should have been the reputed. Then simplified RPT approval for subsidiary, that will help government companies to manage things. So these are the very, very important changes which has brought out, and it will impact drastically. And there is a one change in regulator now. All regulator is working. they are going from the just prescribing to in the format style. So whatever they are prescribing, they are making it format, and format you can't um, manipulate, you can't interpret, you can't do differently. That is the changes, and that's why if you see the last format which they have asked about the appointment of auditor, and their all minimum information will go to the audit committee, where they are asking your entire detail, your infrastructure, your experience, your work profile, your compliance related thing, your past violations, your disciplinary action. All these things will be different, and it will helpful to understand this. With this, I'll just again announce that next webinar is on direct tax, sorry, on income tax code, and the program structure is Ankit will give the presentation of these changes, and after that, Nitesh, Amit, KSR will join, and Aruna madam. So Aruna madam is from the industry, and Amit and KSR is from the practicing side, and Nitesh is a consulting side. So Ankit, so they will give answer, and they will, when they will discuss, they will raise the questions, and simultaneously we'll do the poll also. Over to you, Ankit, to give a presentation on this.
Thank you, sir. Good evening, everyone. So I'll I hope the PPT.
Yeah, this is visible, Ankit. Carry on.
Okay, thank you. So on I think 7th of this month, the SEBI issued a consultation paper. While month on month, SEBI is issuing many consultation paper. Apart from this, there is also a consultation paper on extending the scope of automated closure of trading window through the DPs and their immediate relatives. And subsequent to this consultation paper has also been issued. So as sir mentioned, it talks about key aspects of regulations related to the Secretarial Compliance Report and changes in the process related to disclosures on appointment of auditors, and then RPTs. And it's been taken over from the last amendments that were there on December 12th last year. And the proposal are in continuations to those amendments. So, beginning with the first of the consultation paper's recommendation is with respect to the changes in the annual Secretarial Compliance Report, which is required to be presented by Secretarial Auditors of listed entities. And in this list, and while, sir, you have laid out various reasons why they have carried out the changes or what would be the rationale behind suggesting these changes. But if you look carefully onto the report, I couldn't find much of the major changes which they have proposed as part of the annual Secretarial Compliance Report, because apart from the addition of some of the missing statutes or regulations like Depository Act, SWIFT Regulation Act, and adding assumptions and limitations which we generally issue, or which company secretaries generally issue as part of their secretarial audit report. They have not made much of any major change in the report itself, apart from combining all circulars, guidelines issued by the SEBI along with the regulations, and terming them as SEBI regulations across the report. So I don't find any major change that has been suggested in the key areas of the report, where you actually sums out on the various observations that are there on various heads like corporate governance, secretarial standards, related party transactions, and various other things. But no key changes have been suggested in either of them. To me, the suggestions or proposed changes are more clerical, or just to add some few aspects related to the Depositories Act and Sweat Equity Regulation. Apart from it, I am not able to find any major change in the Secretarial Compliance Report. So none of the proposals are such which cannot be accepted by the professional community and also the company listed entities. Then any views on this from the panelists as to they feel, is there any specific change that they found in the report, which is critical for the company and the practicing company secretaries?
Yes, I feel
Yeah.
so.
Yeah.
Because this, even you, as you said, Ankit, really it is not much of it is clarificatory in nature and more of you can say explanatory. But they have added few things like if you have seen that table under the para number 3, this
Yes.
says regarding the corporate governance requirement, board of directors and committees requirement that was not there earlier. Directors and KMP declarations that also that have to be confirmed in this particular secretarial compliance report, and also material RPT confirmation that whether it is approved by the shareholder or not. Earlier, regarding the director and KMP, only section 164 was there. But now the whole thing, like the whole debarred and disqualification confirmation is there. Then they have elaborated on the policies. Earlier, it was a generic type of thing that all the policies have been done and all. Now, the secretarial auditor has to specify which are the policies which is required, which are adopted and which are approved by the board of directors. And other than that, compliance related to secretarial standard, this was earlier. Generic thing was there. Now this 108 of Companies Act has been inserted therein. So that is there. Other than that, insider trading also, the confirmation has to be very clear whether it is SDD is there or not, code of conduct is there, and other reporting of non-compliance by designated person. In the earlier format, only section 3.5, regulation 3.5 and 3.6 was there.
Okay. I believe because they are
And
not in the
other
track
than that, I think
mode.
overall, other than that, yes.
So,
Since they are not in
Aruna
the-
ma'am,
Yeah, that is not given in the track
Yeah.
mode, but when you see when you compare the older one, it is there. And now the name of the report is also slightly changed. Instead of ASCR, it is written Secretarial Compliance Report. So these type of
Okay.
things have been added therein.
Amitji, any views?
no, I think I agree ki whatever changes as you have indicated, there are not much changes. I have one global comment. I think Pawan sir has been advocating for the same for the quite some time also, and I have also been advocating the same. And my suggestion is that it is high time when SEBI has done so much of revamping as far as audit part is concerned, the giving due importance to the non-financial data in the annual report. I think SEBI may consider putting a concept of integrated non-financial report. There is one financial report in the company which is considering balance sheet, profit loss, cash flow, notes to the account, and policies to the accounts. There could be a concept mooted which can be merging almost 5 or 6 reports and 5 or 6 certificates, where your board report, corporate governance report, management discussion analysis report, CSR report, BRSR report, and the non-financial data can be clubbed into one basket. And that may be subjected to the responsibility, which can also be supplemented by way of a detailed comprehensive report on the compliance status. So essentially, whatever is being currently a part of annual secretarial compliance report can be a part of non-financial report, which will be prepared primarily by the company. And on that, a report of the secretarial auditor may be in form MR3 and in the form of annual compliance certificate report. A comprehensive single report can be obtained. The same direction, I think SEBI has also moved But only thing is that they have not yet mooted the concept of integrated non-financial report as a separate report. But that can very well be done, because they are also proposing to do away with other ancillary certificate like the corporate governance certificate,
Yes.
director non-disqualification certificate, ESOP certificate. So I think one may prepare a comprehensive note on the same, and while we are giving a suggestion, we can provide a comprehensive format also and content also. And over a period of time, I think that can take a shape. So it will give two advantage. One, as far as the reader of the annual report is concerned, he'll be very finding it easy, because the content of all information will be in a particular place. So he can compare also, he can read also in a very easy manner. And whatever company wants as a additional information, that should come as a third part. Now, that should be given a freedom to the company. But as far as statutory financial and statutory non-financial part is concerned, that should be standardized. I think that is my observation. Otherwise, I'm okay with the observations and the proposals what the SEBI has invited on this particular subject.
Amit, your suggestion is very well taken, and I think this is high time. And if you see the complete compliance regime of present,
Correct.
that is focusing on account, but now non-accounting, non-financial reporting has increased drastically,
Correct.
and the percentage has become to 60 to 70% non-financial reporting. That is the right time that SEBI should work out this, and we can ask Aruna Madam that what the Amit is suggesting. What is your call, Madam, on this?
Yes, sir, it is 100% true that there are so many reports, even non-financials, which are coming up like as a consultation paper also says that this auditor certificate or PCS certificate on corporate governance will be combined. So these type of things, actually the secretarial audit report and the annual secretarial compliance report, that has to be first combined. Because now you are now SEBI saying that this also should make part of annual report. So there will be so many things which are repeated in the secretarial audit report itself. As Amit ji said, it's really very much required to compile everything at the one place, so that all the statutory requirement will be covered. As then that, if company is wanting to give some another details for the annual report or for their own this thing, better corporate governance requirement, then it's okay. But this statutory requirement should come in one place with the one report thing, not the particular different parameters or formats.
Amit,
Like,
we can suggest this particular thing along with this suggestion which we are sent.
Yeah, I will share the detailed note as well. So you can update and you can share it to SEBI as well.
Yeah, please. Yeah, Ankit.
So moving along, as other panelists mentioned, now it is one of the also proposal is to provide for the inclusion of the annual secretarial compliance report as part of the annual report along with the secretarial report. So both the secretarial report and this compliance report will have to be disclosed in the annual report for the listed entities. I think this is fine. I don't think there is any much challenge. Companies are already issuing it. Another is with respect to the proposed change, because now since the secretarial compliance report talks about the confirmation on compliance of the secretarial standard, so along with the mandate requirement to comply these accounting standards and regulation 48, there is a proposal to introduce the term secretarial standards there as notified under section 118 of the Companies Act. So as per the mandate and for listed entities, they are also required to comply with the secretarial standards. So Amitji and others, this means that now the body corporates which are otherwise not covered with the secretarial standards, they are also required to comply with the secretarial standards.
Absolutely, Ankit. I was about to raise hand to mention this particular point, and Aruna can more confirm on this because all the banks basically which are listed entity other than other body corporates. We have been in discussion with multiple banks who are listed entity, and whenever the discussion comes, the point comes that since the provisions of Companies Act are not applicable on these banks and they are governed by the special provisions of law, so they are per se not applicable unless they are specifically mandated. So maybe annual compliance certificate report, as was amended way back in 2023, the concept of limited verification of compliance of secretarial standard was made mandatory by the secretarial auditor in his report. But still, the banks and the other body corporates were insisting that since the company secretary issued secretarial standards are not mandated on them, so they are not applicable as such. So we can't say that we have complied or not complied. So you can mention that this is not applicable. We have been encountering such kind of reactions from the body corporates. Now I think SEBI has moved the right direction where the accounting standard term is coming. They are adding a term secretarial standard also. I think that will serve the purpose and give a clarity also, and this was very much required. And just one more point, in annual secretarial compliance certificate, which is in vogue as of now, the idea was that the secretarial standard compliances which are limited to doing a particular compliance will be subjected to the verification, not all secretarial standard. Now,
Yes.
because the entire entire regulation 48 is going to be amended, I think this is going to be a very welcome change. I fully agree with the proposal.
Mm.
Yeah, I think.
Yes, sir. As Amit sir, you have already clarified that now this secretarial standard will be applicable to the banks. So the mandatory are 1 and 2. So those will be all the banks and other body corporate has to follow that. But one thing is when the scope of secretarial standard itself, it says that it is applicable to the companies incorporated
Yes.
under Companies Act. So that is a thing which also is required to be changed or revised or clarified better.
Ma'am, Aruna ma'am, even if that is not changed, the secretarial standard applicability by itself is triggered only on the company incorporated. But because SEBI has
Yes.
extended the applicability to the listed entity also, even if secretarial standard are not amended, I don't see any legal challenge.
Yeah, that way
But
it's
there
perfect.
may be a challenge because it also says that standards issued under the section 118, and when section 118 it will automatically be only about companies. So while mandating under regulation 48, there are many things which are there under the Companies Act which the LODR also provides. But just by mentioning this in regulation 48, we have to see how far that can be applied to a body corporate, because when fundamentally the secretarial standard itself
No,
talks
Ankit,
about the application
that
on a
is
company.
possible. No, Ankit, for listed company, that is possible because what happens, SEBI can propose any restriction, any higher compliance. So suppose section 118 is saying that it is applicable to only companies, then bank is not there, other people are not there. But SEBI can put restriction, SEBI can propose this, that this secretarial standard in Companies Act will applicable to the bank also.
Yes,
That-
mutatis mutandi provision will be applicable.
yeah.
It has to be read in that context.
Yeah.
Okay, going along. Another important change is currently the changes in the Office of Statutory Auditor, apart from the KMPs and SMPs, are required to be informed to the exchanges under Para A of Regulation 30 or of Schedule 3 of Regulation 30. Now, similar obligations have now been also cast on the Office of the Secretarial Auditor. Companies will be required to inform in case there is any change in the Office of the Secretarial Auditor at par with the Statutory Auditor. That change can be appointment, resignation, removal, anything.
Yeah, I think this is.
So that in all the places, it's trying to bring them on par with the statutory auditor. So going then,
Whether change includes the appointment, मतलब if somebody is appointing
yeah, it should
first,
include appointment also, and also the resignation. And I think the current XBRL filings, I also require this.
that is not
Otherwise also.
specifically okay. That is not specifically mentioned. You take the secretarial auditor. They specifically mention the auditor.
Now they have
So-
specifically mentioned the secretarial auditor. Yes, earlier it was only auditor, but it will require in all the cases.
But this cannot be termed as a deemed material event as such when there is a routine course of completion of tenure or routine of appointment, because now the appointment will go to the annual general meeting or the general meeting of the shareholders. So that is not a thing. It should be a casual vacancy or something like resignation or some removal or those type of thing should be there. I think so.
So generally, we are intimating in the case of statutory also on all appointments. I
Yeah,
believe
that's correct.
same should also apply to the secretarial auditor.
Yeah.
Ankit,
Yeah.
what Nitesh is trying to say,
Hmm.
that has some merit. What we can do is we can suggest for changing the definition of a auditor to include the secretarial auditor also. So all places wherever what the provision have been specified for the auditor will automatically become, because in any case, if you see, there is not going to be any difference as far as the auditor provision is concerned, right? So we can examine, and then I think that can be suggested. So all these ambiguities regarding the appointment, whether the appointment is going or not, and as Aruna ma'am is saying, ki retirement provision when the auditor is appointed on completion of the tenure, whether that time we will be required or not. I am very clear that it is required to be given, but I think ambiguity can be reduced.
Yeah, it is clear that is now the word says that change oblique resignation. So whenever is a completion of tenure or something like that, it is there. But it is not a material event sort of thing. It is known to everybody, like tenure is coming to an end and all. So it's that way means disclosing within 24 hours or something. That thing is slightly not warranted maybe.
But point is, ma'am, that when you will make the intimation to the exchange portal, maybe my retirement is coming today. So if I don't put it in a part A category, then I will not trigger the disclosure within 24 hours of time. I think that is the issue. That is why they are treating it as a deemed material event
Yeah, that's
for
correct.
understanding purpose only.
Similarly, to the statutory auditor, now for the secretarial auditor also, the fees that is being paid by the company and the subsidiaries to the secretarial auditor needs to be disclosed. Or all entities in the network firm or network entity in which secretarial auditor is part. So Amit, I believe we had a discussion also on this topic some while ago, where I believe CA Institute there are some guidelines on network of chartered accountants or similarly. Is there any guidelines? I think I don't see any guidelines which the institute has issued
So
regarding
I
company
think
secretaries in practice
Pawan sir
setting up a network.
Yeah, Pawan sir can confirm more. I still remember 2015, we had mooted this concept of network in the ICSI, and the proposal was also submitted. I think it could not see the light of the day. But so far, as of now, officially there is no guideline with regard to network. But maybe I think now, since SEBI has given a concept on parity to the Chartered Accountant Institute, so maybe the Company Secretary Institute will also consider and think about and release some guidelines. So far, it is not.
For the participants, can throw some light on concept of network. Amit?
Yeah, you are asking from me. Oh,
Yeah.
so it is a
So
very
you mooted some guidelines earlier with
yeah. It is the concept, something which is very akin to all big fours like KPMG, EY, PwC, they are working on a concept of network. So they give a kind of affiliation to their member network companies, to their member network firms. So you get a common branding, you get a certain set of standards. So you are assured if you are taking the services from EY network firms, maybe it is XYZ company or PQR company or ABC company, they are given a membership of EY network. That means you can be assured with regard to the quality standard. So that is the kind of concept that is prevailing world over, and CA Institute has given a formal guidelines in that regard. I'm not sure how much it has benefited to them out of this, but certainly I think it's the need of our, particularly when there is a need to collaborate more, need to standardize the processes more, and need to have a big mega firms as well. I think that is the step one in that direction. Unless and until we come closer, we have a standardization where we cannot have a large mega firms, at least we can work with the network kind of arrangement wherein we can have some homogeneity and the standardization.
Sure, thank you. Then another important is now they are amending the master circular. There is a proposal to amend the SEBI master circular and to provide for mandatory observations of the guidance note which ICCI has issued in connection with the secretarial audit and the annual secretarial compliance report. Till date, they were having advisory role in terms of the firms can use them while conducting their secretarial audit and the or preparing the annual secretarial compliance report. They act as a guidance note, and now, but the based on the proposal, there is a requirement. There is a proposal to specifically include in the master circular that the secretarial auditor will have to follow these guidance notes while conducting the audit and preparing the report. This will definitely help them because all these guidance notes bring a lot of clarities. Yes, ma'am.
Yes, it was. I think it was earlier also. They were using it and referring it. And it is good that they will keep it in line with whatever amendment SEBI is bringing out.
It
So
gets a statutory.
that is much required and mandatory, or even though Amit sir can tell, but yes, they would be compulsorily or mandatory following it. I think so.
So
Not just a guidance way.
Recognition of a guidance note prepared by the Institute of Company Secretaries of India, I think, is a big recognition that regulator has recognized that for the purpose of issuance of these report. My one suggestion is that Institute has came out with the auditing standards also, and which is mandatory also on the secretarial audit and the other audits as well. So when we are now talking and mooting the concept of annual compliance certificate report and the secretarial auditor, at least SEBI can come out with the inclusion of those guidelines and those standards, that is the auditing standard, also as a mandatory as far as the listed entity is concerned. Although Institute has already mandated, so if me and you are doing the secretarial audit, adherence to the CSAS 4 is mandatory. We can't escape out. But if it comes from the regulator, I think it will have a different level of adherence to the standards. I think
a declaration can be asked in the format itself that the secretarial auditor has duly complied with the applicable auditing standard.
Somewhere I think that can also be included.
Yeah.
That's the high time, I think. Already more than, I think, 2 years, 3 years have passed by mandating by the institute itself. So I think it's a high time when we can expect regulator to also recognize the same.
Sure, we'll do that as part of the recommendation. This year already discussed. I don't think this is something. Okay. Okay, now coming to the statutory auditor, there are proposals. So there are three proposals. First is the proposal is with respect to the audit committee. That audit committee has to assess the qualification and the experience of both the firm and the individual partner, whether they commensurate with the size and level of size and operations of the company. This audit committee has to record while they are considering the appointment of the statutory auditor. So this is one of the recommendation in connection with the appointment of the statutory auditor. Similarly, there are changes which are suggested that the information that the audit committee and board and shareholders needs to consider while approving the appointment or reappointment of statutory and secretarial auditor. So for statutory auditor, there is a requirement added under the audit committee that the audit committee has to note in terms of both the firm and the individual partner who will sign the report, and whether the experience is in line or qualification is in line with the requirements considering the size and operations of the company. And then additionally, a list of information has also been proposed in the consultation paper, which needs to be placed before the audit committee and board and shareholders in case of a statutory auditor, and in case of a board and shareholders for a secretarial auditor. So like, for example, for statutory auditor, details of the firm, staff strength, network alliances, experiences of the partners of other listed entities, group entities, quality maturity model, compliances with respect to section 144, fee details of whatever fees they are charging for these services, for taxation, company law, all other services that they are rendering to the company, what are fee details they need. So there is a big list of requirements that the audit committee and board has to consider. Similarly, for shareholders, the qualification, experience, fee details, as there are significant past associations exceeding 10% of the turnover, in case there are transactions which are exceeding 10% of the turnover, in case there are any orders against the firm by the ICAI or NFRA and the company is still appointing, what is the rationale behind it. So a whole lot of information needs to be placed before the company and the shareholders in terms of statutory auditor. Similarly, for secretarial auditor also, a lot of information is required. Past association, what listed entities they are doing, staff strength. There is a lot of overlapping in terms of both information that is required either in case of a secretarial auditor and the statutory auditor. Similarly, they have also need to disclose any disciplinary action being taken by the institute or by any other authority, past engagement with the listed entities where the appointment is being proposed, what services that are being taken by the company from the proposed secretarial auditor firm. In case there is a new secretarial auditor, then if there is a fee change, what is the rationale? All these things are now required to be disclosed to the various governing bodies in a company, audit committee, board, and the shareholders. I think all the informations are such which are valid, which will definitely help the shareholders in assessing the capability of the firm, both statutory or secretarial auditor, in a better manner. And I think this will also encourage the firms to broaden their staff. They have also asked about the website, a lot of things. So they will also be need to structuring their internal organization so that they are also able to provide all these information to the companies at the time of appointment. So I think it's a welcome move both from a perspective of the shareholders who will have to finally approve the appointment, and also from these perspective of these firms. So they will also try to create a new mechanism within the organization to strengthen their processes.
Ankit, while reading, I was
Yeah.
just putting, they have specifically added a lot of detail of the signing partner.
Yes.
So I'm not sure how it actually works. Suppose a statutory audit firm is engaged. So appointment is in name of a firm. You don't know who will be the signing partner in one particular financial year, or is it so? Or maybe if today X is the signing partner, tomorrow the signing partner may also undergo a change without any change in the audit firm.
Hmm.
So what information will be placed? I am little unsure about. Maybe there are suppose 12 partner firm. You don't know who really would be the signing partner. Is that information so very important that that is required to be placed, or we can make
I
appropriate?
think well, the information is important because actually it's the person who will sign who will do the audit. But the challenge is since it's a appointment for a period of 5 years, it might not be possible that the person is continuously signing all the 5 year report. He might sign initial 2 years report, or there is any other reason he left the firm, or for any other reason he's not able to sign, and some other
Ankit,
partners are signing.
Ankit, Ankit, I have one. I think we should ask this question from Aruna, madam. Madam, when they are making this type of thing, because that is also very, very important. Like you are becoming a sectoral audit, your association, your staff strength, your branch, like SEBI has done recently done with merchant banking.
Hmm.
Whenever they are giving a license, now they want to see how much staff, what they are doing, you have a strength or not. So, do you think this particular aspects will do it better?
Yes, sir, 100%. As you have already seen that when we have floated that RFP regarding the secretarial auditor appointment, we have specified these type of things already, like how many partners will be there, what will the place of location. Not only the partner and those things, also the staff that particular firm is having, and what are the strength, what are the past past work they have done, how many listed companies they have dealt with, how many PSUs they have dealt with. So that is very much required. Actually, what happens now? Otherwise, if you just go by the peer-reviewed firm thing, only that thing, then it will be very difficult for such a large organization like us, because we are having so many subsidiaries, associates, and as a complex structure also. So for big corporate like us, it is very much required that secretarial auditor or statutory auditor, whoever is auditing us, it should be having the good number of number of years of experience, and also the expertise in that particular field. It is very much required. So it's a welcome move. Like SEBI has now become a prescriptive thing. They have told that this much of thing has to be presented to the audit committee or shareholders. So they will be in a better position to decide on it. Typically, in case of banks and other organizations which are government owned, the auditors are appointed through by RBI and CAG. So they also go through with this specific qualification criteria of those particular auditor, and then they give the name to the bank that these will be your statutory auditors.
Okay.
For example, CAG and RBI, when they appoint the auditors to the particular company or corporate, then also they see to the this type of credential while finalizing the their name for that particular firm. Like in SBI, there are 20 auditors,
Okay.
statutory auditors. So that it is required. Actually, it is required in large type of organization.
Pawan sir, I want to throw some light why they need the profile of the signing partner, because as a firm you take assignment from various corporates who are running into one corporate business is different from other corporate. One is into insurance company, one is into NBFC industry, one is into a n number of industry which are coming up. I think the profile of the signing partner is very much important to know whether that person is fit and proper to carry out the audit or the compliance audit of our company. Because the company law compliances and the SEBI law compliances is very much different from the BFSI compliances. So you need to know the profile of that signing partner to know whether he or she is a fit and proper to carry out the audit of my compliance system or not. That is a practical challenge which
Yes.
Amit ji has brought in, that there's no guarantee that person, because you are appointing for a 5 years, there's no guarantee that person will continue for another 5 years. But that is, I think the firm, the audit firm has to ready with their alternatives. Yeah, business continuity plan must be there with them, so that whenever that person is going away, then there is another person ready to carry out the audit and having the same profile to carry out the audit of that BFSI industry or any specific industry.
Okay.
No,
Yes, it's very, very much correct, because just like Nitesh has said, the particular person or the somebody you have to assign that particular job, na? So the signing partner has to be made accountable for whatever audit he has done or she has done. So that's why the profile of that particular partner is required, because all you cannot put everything on the firm as such. You should know who is dealing with you. That's why it is much required.
I fully agree what Alona ma'am is saying. I'm understanding, but what my point was, let me just read the relevant para. It says age, qualification, audit experience of the signing partner, quality review partner, and assurance lead, and the managing partner or its equivalent, if any, of the proposed statutory auditor. Now, next point is other audit engagements of the signing partner of the proposed statutory auditor. I think that is where lot of firms will have a difficulty in sharing the information with regard to the proposed audit assignments, right? I am a partner of the secretarial audit firm or the chartered accountant firm, and in what number of other engagements the duties have been assigned to me, if I have to state before appointment to the proposed appointee, that may be little uncomfortable situation for a firm also, as a confidentiality matter or as maybe other matter. I don't know about the practice which is being there, but I think maybe if I have to give the name of the clients also, that also goes on a very generic basis. Maybe they ask the segment whether you have experience with regard to insurance or so or not, if I am being engaged for the insurance, but specifically asking name about the particular company, I may provide the declaration that I have no conflict of interest or I am not auditor of the competing firm. But specific detail, I don't know how industry is going to take it, and are we going to really benefit out of this whole detail what is going to be asked. That is why I have just flagged that. Maybe
Okay.
Sir, can we not take it as a, you want to make a distinction that overburdened assignments, like suppose 100 of
Yes,
assignment
correct.
you have, and you are not giving a full time because nowadays a listed entity, they carry out the quarterly audit of their compliances. So I think they want to know that how many compliance assignment you are taking.
I
Yeah.
understand objective is same, but you can't really judge on the basis of that. Maybe suppose I am a audit partner who is a signing partner, right? And I'm alone. I am not supported by any of the junior staff. That is situation one. Situation two, I am alone and I am doing even lesser number of audit assignment, but I am not having any supporting staff. Situation A, where I am having 10, 20 supporting staff, I may do even more number of work, right? Situation 2, but you are not asking me entire detail. So that information may be a misleading information. That is the point I am trying to emphasize.
So we
Sir,
can write this particular point in this suggestion, which you are mentioning that way. Kanitesh, you are saying something?
But the
So-
audit engagement word is written, other audit engagements. It doesn't say that you have to give the names of whoever company or whatever work you are doing. You can say that audit engagements are there in this type of means
numbers in
the
numbers.
We have to give
turnover, yes,
numbers or names.
numbers and the size
Hmm.
of the companies or body corporates, that way.
Amit sir,
Because
whether this information is not useful for me for the shareholder to approve in my favor, I can take it as on a different perspective.
yeah,
I
yeah.
think, then the concept of board of director will be, we are doing away with the concept, right? We have to respect the responsibility assigned to the board of director and to the audit committee as well. Their work was selection, right? They have done their responsibility fully. Now it's only matter, yes, certain set of information are required to be submitted to the shareholders. But shareholders are not supposed to go beyond one particular line, and they have to respect the selection what the board of director and the audit committee has done. I think that's my way of looking at it.
Okay. Next.
Okay.
Yeah.
So this is what we have discussed. Now coming to the RPT approvals. So in the consultation paper, the current requirement is that in case of a subsidiary, the listed entity is required to approve all related party transactions to which subsidiary is a party, but the listed entity is not party if it exceeds 10% of its standalone turnover. The consultation paper highlighted an example where for any reason the transaction by a subsidiary of a listed entity is crossing the 10% of the consolidated turnover limit, making it is a material related party, but not crossing the 10% of its own standalone, thereby avoiding the need of an audit committee approval. And therefore, they feel that there was a need to bring some clarity on this point. So therefore, they have, apart from the requirement of the existing 10% standalone turnover, they have also introduced two another limits. One is for the main board companies and other is for SME listed companies. Is for 1,000 crores for the main board and 50 crores for the SME listed companies. So if or 10% of the standalone turnover threshold, whichever is lesser. So in this case also, the approval of the audit committee of the listed entity will be required. I don't think there is. In case of subsidiaries, there was also a lot of challenges faced in subsidiaries which were recently incorporated, for which there is no financial statement that is available. So how you can check the criteria of the 10% of the standalone turnover. So for that subsidiaries also, they have come out with a criteria of the 10% of the standalone net worth instead of the turnover, along with the monetary threshold of 1,000 crore or 50 crore, as the case may be, which also require the approval of the audit committee. The net worth shall be certified by a practicing chartered accountant, and should not be of a period older than 3 months. And in case of a negative net worth, the share capital and the securities premium will only be considered. Financial track record means that company should have at least 1 year of the financial statement. So in case of a newly incorporated company where the financial statements are not available, or it is just a 6 months old company, the financial statements are there, but not for the entire 12 months. Therefore, where then the threshold of the net worth of 10% or 1,000 crore or 50 crores will be applicable for the purpose of ascertaining whether this transaction requires the approval of the audit committee of the listed entity. That's the holding company.
For Ankit, what is the purpose of bringing this? That explain to everyone.
Sir, the purpose I already explained, that in the companies which are already established, which have a track record, SEBI found some cases where, in spite of not meeting the 10% standalone net worth requirement, the 10% consolidated requirement was met. Turnover requirement was met. As a result, the transactions weren't becoming a material related party transaction, and in which case the approval of the shareholders was required, but not the approval of the audit committee. So therefore, to plug that gap, the SEBI has come out with this consultation paper where they have made a recommendation that apart from the 10% of the standalone turnover, the requirement of 1,000 crores or 50 crores, as the case may be, will also be applicable. And similarly for the other subsidiaries where you don't have an audited balance sheet available based on which you can determine the 10% turnover criteria, they have come out with the new criteria of 10% of the standalone net worth and 1,000 crore or 50 crores, as the case may be.
I think they are bringing in line with the shareholder thing, where material related party transactions limit. But on that, in case of shareholder, you take consolidated. Here for the audit committee, you take, I think, standalone. That is the only difference, huh?
Okay.
But as far as the suggestions are concerned on these 2 points, these 2 points, I think it is okay. There is not much of the difficulty. But I think there is a larger issue which we have been flagging previously also in terms of Regulation 23 as to what is the meaning of previous transaction and how it will be determined. And now, particularly since we are seized with the matter of transaction with between the subsidiary and the related party of the subsidiary, I think 2 points which we can, if Ankit or Runa ma'am can answer, whether in calculating the previous transaction, the related party transaction which is entered into between the subsidiary and its related party prior to it becoming a subsidiary of a listed entity will be considered as a previous transaction or not. So suppose I became the subsidiary on 30th of June 2024 and there was a transaction in the month of April, May, June. Whether the transaction which has been incurred during April, May, June, when I was not subsidiary, will be included in the previous transaction. This is point number 1. Point number 2, whether the related party transaction entered into between the subsidiary and the related party prior to its becoming a related party. So, entity A and entity B. Entity B is a subsidiary of a listed entity A, and there is a related party X. So, related party X became a related party in the month of June. So, prior to June, April, May, June, whether the transactions which have been entered into between subsidiary and the related party will be considered as a previous transaction or not. These are the two scenarios. There could be similar other scenarios for the other general cases also. I'm not, and industry is also grappling with, Ankit.
Sir, in my case, in my view, in both the cases, it will not be considered because they were not a related party at that point of time. But my another question is, I believe now they have added the term a single transaction or series of transaction. Now, for example, as of now, in case of a subsidiary, if it enters into a transaction with a related party, as of now, we are not aggregating other transactions. We are seeing each transaction as an individual transaction and getting it mapped with the 10% standalone turnover requirement. Now, as per the from what I can read is that if I am entering into 10 different type of transactions with the same related party, my subsidiary is entering into 10 different transactions with same related party, then all needs to be aggregated in order to check the conditions of the 10%.
Yes.
Which was not there earlier.
That is correct.
So earlier we are seeing each transaction as an individual transaction. So that needs much more deliberation, because the points that you raised, I cannot aggregate a transaction which was not a related party transaction at the time that transaction was executed in order to define my limits as of now, today.
Yes, I do agree with Ankit because the definition itself says transfer of resources and services between the subsidiary and the related party.
Yes.
When you are not a subsidiary, then the question of treating the transaction as related party transaction does not arise. And then aggregation is required, but aggregation will be required when the particular subsidiary has become the subsidiary, or whatever B or X, what the example you said, when they become the related party, then only you have to give the you have to aggregate that particular amount in that related party transaction for finding the 10% of standalone turnover or checking the threshold of 1,000 crore.
So why I'm raising this issue, because we had a discussion with the auditor also, and we had a discussion with the audit committee chairperson also for one of the listco corporate, and there had been this issue, and their view, I'm just sharing their version. Their version is I agree that the previous transaction may not be a related party transaction per se, falling under the ambit of Regulation 23 or in the definition of 21ZC of the SEBI LODR regulation. But the language used is the previous transaction. It is not saying whether the previous transaction, it is saying the transaction between these two parties. Now, whichever is the
It has
previous.
to be read in the context, Amitji.
Yeah, I understand. Matlab, maybe I'm just bringing the point. I agree, and I'm also of the same view. I was arguing with the same logic, but we had a tough time to make them understand that this transaction will be treated in isolation and will not be countered with the previous transaction. All right, I think.
Okay.
Amitji,
Yeah.
Yeah.
with respect to the previous transaction, whether you need to include or not, irrespective irrespective of your first question, whether previous transaction or series of transaction accumulate or standalone basis or consolidated basis. I think in last year 2024, there's a Linde case where SEBI has taken a view that all the transactions, whether previously
His question is different. It's a
Mm.
question when the transaction was not with the related party. He's not questioning
Entity
all
was.
what needs to be aggregated. He's
It is-
questioning that
Yes.
when the
There
transaction
are
took place,
two
it was
limbs.
not related party.
Yeah.
No,
There are two limbs to the
Ah.
problem, Nitesh. In first case, it was not a subsidiary. It was doing a transaction. Entity B was doing a transaction.
okay, I got it.
B became subsidiary later. And in second case, B was subsidiary, but X was not.
X was not there. Mm.
Okay,
So X
okay.
became related party later. Na?
Okay. So from
Okay.
the date when it
Yeah.
became subsidiary, then we need to see.
Okay. So
okay,
going
next.
on the applicability, I think uh, there are different views on this topic as to whether the related party of a how the related party of a subsidiary would be defined in the context of the definition and regulation 23. When we were always under the view that related party would always be related party in terms of the manner in which it is defined under the regulation. But I believe there was a lot of different views. SEBI also issued an informal guidance in one of the matter where it has clarified that related party of a subsidiary has to be ascertained in the manner in which the related party of the listed entity is being defined. Now there is a proposal to add an explanation to further clarify this, that a related party of a subsidiary will have to be defined in the same manner as the related party of the listed entity. And I believe it makes a lot of sense to consider or to take this view, because I cannot take for a listed entity, I take the widest view for a related party. And when it comes to subsidiaries, I take a very limited view. And when the objective of bringing the approvals of a subsidiary with a related party transaction is to also curb the indirect transactions that were entered by the listed entities through their subsidiaries instead of entering them directly. So I think it's a welcome change, and explanation will definitely bring a lot of clarity. Then there is also another clerical change that is proposed, where it is intended to be clarified that a transaction between the holding company and the subsidiary, which is mentioned under Regulation 3, it's between the listed holding company and the subsidiary. I don't think it was required, but SEBI must have received some complaints or some views from the corporates or professionals that there is some need of clarification that it has to be between the listed holding company and the subsidiary. So therefore, they have also proposing to add a word listed to the word of the holding company to be read as listed holding company and the wholly owned subsidiary. So transaction between the listed holding company and its subsidiary and transaction between two wholly owned subsidiaries will continue to be exempted from the requirement of the approvals under Regulation 23. Any views from the panelist?
With respect to, Amit sir, please proceed.
No, Nitesh, please go ahead.
So with respect to the first, I think it is an explanation they have added. And also, if we read the consultation paper, they say we are of the view that for a subsidiary, we will treat it as when for a subsidiary, I need to know who is going to be my related party. SEBI is of the view, or from initial they are of the view that we read the related party as defined under LODR, not as per
Yes.
Companies
Yes.
Act. So it has a very retrospective impact, even if the explanation is added today. If somebody, if because full year has been elapsed, now many of the companies who have taken this view that we have, or they have taken the audit committee approval for the related party as per the Companies Act for its subsidiary, now they have to revisit. They have to revisit, and if there is any other related party which comes out as per the related party as per the LODR, now they have to ratify all those transactions before 31st of March. That have a, I think,
You rightly said, but I think those who were reading it that related party would have a different meaning will definitely are misreading the regulations, because the
but they
regulation is
have a,
very clear. All
yes.
terms used in the regulations have to be read in the context of the regulation, and you cannot read related party of a listed entity as one in the widest possible terms defined in the regulation, but not the related party of the subsidiary.
Ankit, I agree that we had discussed many a time, I think, on this particular point also, as to how the related party term in case of subsidiary will be interpreted. So we had a very consensus view that it has to be read as per the definition given under the LODR only. So that is okay. But the difficulty that is being faced, especially in case where your subsidiary is a entity which is registered outside India. The challenge comes in those cases. As far as the Indian entities is concerned, I don't think anybody has got any challenge or any difficulty also. The challenge only comes when I have to prepare a list of related party as per the provisions of 21ZB, because my accounting standards which are applicable on Indian entity is different, and the way accounting framework is structured in the different jurisdiction, maybe it is UK, maybe it is Singapore, maybe it is Australia, maybe it is US, their laws are different. I am not saying ki we can't make application of 21ZB to identify. We have prepared the whole lot of Excel sheet to be shared to the subsidiaries outside India, asking them to fill out all that information so that we can figure out who are the related party thereof. But we have faced lot of difficulty because they are saying there is no such kind of structure which we can readily find out. So there is a lot of thin line reading in between when we are to identify the related party as per the Indian laws, right? That is where I think a lot of struggle, lot of challenge that the Nitesh is also trying to indicate. I think limited to that extent, there needs to be some relaxation, or there needs to be some clarification. I don't know how it can be reconciled, but yes, that is a problem which we are encountering as of now also. But after adding a clarification, I think the room of doubt has been removed.
Yeah, but sir, I understand. I and Nitesh also had a lot of discussion around it. But we also need to understand the position of the regulator. For regulator in global jurisdictions, it is very difficult to establish things because it cannot give different meanings to different jurisdictions. So they have to come out with some kind of a standardization, and in the context, you have to find people. Obviously, it would be difficult at times to determine that list, but maximum effort should be given, and whatever best can be done. And I think you must have done in the exercise that you are referring to. At the other change, I don't think that's much. There is
Ankit,
much of
I have
that.
one small point
Yeah.
on that also. Now, the difficulty, I think this point also we have discussed, elaboration or discussion on the point whether this exemption with regard to the wholly owned subsidiary, exemption whether will be available to a wholly owned subsidiary whose account had not been consolidated in the past and are proposed to be consolidated. This is a case
Yes,
where
we had a
I have,
discussion.
yeah, this is a case where I have just created a wholly owned subsidiary, right? In the month of, let us say, February, and I'm going to prepare a consolidated result once my financial year is over, right? So I'll be preparing after that year, right? So whether I will be entitled to 23(5) exemption in this subsidiary or not. This is the point number one. Point number two, I think it is high time the Companies Act 2013 as well as SEBI LODR time and again has been using the term wholly owned subsidiary. Unfortunately,
defined.
not been defined. Now, when so much, and if it is a plain vanilla entity A below which 100% subsidiary B and below which again wholly owned subsidiary C exists, there is no problem because this is a plain vanilla case. There could be multiple permutation combination, and everybody is having his own observations and views that yes, my entity will be considered as a wholly owned subsidiary. Very difficult to take a call in respect of the very subject whether that entity is a wholly owned subsidiary or not.
I think on the first point, we as of now are taking all wholly owned subsidiaries for the purpose of exemption, even which are formed recently and their consolidation is left on the just on the assumption, because they would be ultimately consolidating at the end of the year. And I believe the intent is to also to work upon those lines also. But yes,
The industry is
explanation can
divided
be
and
issued.
yeah, that is why I'm saying because now since SEBI is coming out with lot of clarification, this is a very small clarification which can also be added. I think if that can be included, that will help the industry in removing that ambiguity.
Yeah,
I think this is the right mode by way of this consultation paper that can be done.
Correct.
Okay.
Amiji, we can read that exemption shall not be applicable to those wholly owned subsidiary where the holding company failed to consolidate. I think we should read it like in this manner, because assumption is like a privilege.
There was that
where
case
you
which we discussed. What was the facts in that case also during the course of one of the
yeah, we discussed, but
Ankit, it could
couldn't,
be intermediate wholly owned subsidiary also. It could be a case of an intermediate wholly owned subsidiary as is provided exemption under Rule 6 of the
yeah, but I don't think sir वहाँ पे
rules.
challenge होगा क्योंकि वहाँ तो खैर because of the
exemption ही है, वहाँ
operation
पे
of
तो
law
आप
the exemption is there.
हाँ नहीं, but how you treat if you have a exemption and you are not consolidating, whether you will be done away with the exemption?
No, we would be taking the exemption if the intermediate subsidiary is not being consolidated because of the flexibility given under Rule 6. We'll take the exemption under Regulation 23.
23(5) exemption, in my view, will not be applicable in those cases because it is saying that you have to consolidate, then only you will be entitled.
Sir, I think it has to be read in that context because the reason why the Rule 6 came into picture, because ultimately all the companies were getting consolidated through one company. So therefore, that exemption came, and I think
Shareholders,
ultimate objective is the financials of the subsidiaries are being consolidated at the group level.
Ankit,
And the
point is
and the
that-
word are is used, not has been consolidated. Are consolidated can be taken as a continuous thing, maybe. That is my opinion.
Amit sir, also read clause C. Clause C also says ki transaction between two wholly owned subsidiaries. So one might be a intermediary subsidiary as well.
Yes.
So
No.
you can also
I think
then
Ankit has added one more point. I was very clear on that, but he's having a difference of view. He's saying ki if because of Rule 6 of the company accounts rule, I am not required to, I am a listco, I am not required to consolidate my wholly owned subsidiary, right? Because my parent company, which is a holding company of this listco, will be consolidating, right? So in
Yes.
that case, exemption will be available,
Hmm.
right? Whereas what is the case like? My listed entity shareholders are not privy to the accounts of my wholly owned subsidiary. Still, they are entitled to the exemption. I have a doubt.
Sir, my question, my answer was in the context when I am the listed holding company. Yes, if I am not the listed holding company, that I need to relook into the matter because then it is not, as you rightly mentioned, I am not consolidating it. My holding company is consolidating. I was on, when I replied to that question, is what it was on the context that I am the listed holding company, the ultimate listed holding company.
So my suggestion would be we can include all these three scenarios. I don't know how it can be worded in clarification, but let us flag all the three scenarios regarding the wholly owned subsidiary, and we can request the SEBI to address all these three situations so that the clarity can come. And fourth issue, to attempt to define at least the wholly owned subsidiary, whatever is the intention, at least that can surface down, because that is also very industry grappling on
And
that.
Amitji,
Uh,
another question is, sir, just a minute. When now they are saying that the newly incorporated subsidiaries, how their RPTs will be regulated by
Yes.
the listed entity, then it, while we'll add, I think it has to be also read in that context also, that the exemption will also be available, because if you are regulating a newly incorporated subsidiary by way of a provision, then the exemption that is there, that should also be available to that subsidiary.
I agree.
Ankit,
Yeah.
now because there are so many questions.
Sir, I believe we are done. There is nothing more else. All
Okay.
the questions were considered.
Okay, let's do now question answer. We should take it because so many questions are there. Some question, Ankit, you have answered, but
Yes.
these are some important questions which public should know.
Yeah, you can post them, sir.
Yeah. So also in the AGM notice, appointment of auditor to be ordinary business or special business, because ordinary business include appointment of auditor, not specifically state secretarial auditor.
So I replied that it should be a special business.
So yeah, no, that is
The
right.
auditor under the Companies Act is statutory auditor only.
Okay.
Correct.
Whether any parameter have been prescribed for assessing the secretarial auditor, as you are suggesting, please refer SEBI circular. What is the circular?
No. When I said that the qualifications are there in the circular, the December 31st circular, apart from
Yes.
these additional disclosures that are required to be presented before the audit and board and the shareholders, are also a kind of an additional parameters which the company will consider while approving the appointment.
Okay, now very important question, which is very confusing, and you have given answer. Do companies still need to obtain annual corporate governance certificate from auditor PCS? You have said no.
No, so all the companies which were now required to have the annual secretarial compliance certificate are not required to obtain the CG certificate, the director disqualification certificate, and the certificate under the ESOP regulations.
Will not be required.
Post this consultation paper become the
Yeah,
circular.
Not be
yes,
required.
obviously.
Yeah, naturally. Can a company take any other service like certification of form from secretarial audit
Yes.
auditor?
Yes.
Yes.
It is that is also
defined.
defined under 31st December circular, which are what are the restrictions on secretarial auditor. It's
Ma'am, it has
given.
not very categorically mentioned certification.
Yes.
They have used
Yes.
very subjective words. But sir, as a secretarial auditor, we should avoid certifying the
No,
form.
again, now I'm posing
Company.
a different question. Amit, because this circular has come, so they are saying secretarial auditor mean like a statutory auditor, that he will do only that work. He will not do a consulting. He will not do any certification. So let's divide consulting and the secretarial auditor report. The certification can be part of your secretarial report also. So what Ankit is saying we should not do, but what is your view?
Sir, absolutely clarity is there, at least in my view, that as far as doing any management function, which is defined under section 144 of the Companies Act also in the context of statutory audit, that is prohibited. When I'm saying management, so suppose management has to do some is required to form any opinion on something, right? He wants some management advisory, right? Whatever is the function of a management, if I am supporting that function, I am stopped. But in case of a certification, like preparation of a form, if is required to be done by the secretarial auditor, because that is the function of a management, I cannot undertake. And if I am paid for that, I am in conflict. But if I am only required to verify whether the form has been correctly filled, I can certify there is absolutely no difficulty. I can do so. I can continue to do so without having any violation as far as the December 31 circular is concerned.
So
Okay.
it means being appointed as a scrutinizer, being appointed some other services, you are allowed.
Allowed.
Those are statutory services, I think. But the
Those
but
are
but thing,
but
as I
they,
mentioned, that if I am doing an audit of a company, shall I also be doing the certification of the forms
Yes.
as a good governance practice?
Audit is a
I
Ankit,
think, Ankit, I think what Amit is saying, we should understand that if you are making that you will do only secretarial work, then and you will not do other work. Other work mean management work where there is a conflict. But something which is connected to this you are doing, I don't think it should be restricted.
correct.
And but this particular point which is there, when we write to the SEBI, we will add this point. Okay.
Like just one more example, like whether that secretarial auditor will be able to vet the policies.
See,
Now,
Any
vetting
I
the
think
policy is consulting, and in my view, you may not be able to do so.
Sir,
yes,
main
I think it's a management
management.
function.
Management function.
so. I think what is a clear-cut demarcation? Any work related to management aspects is restricted, but rest of the work connected to secretarial audit, including certification, including. But Amit,
Scrutinizer appointment is also
but
allowed.
no, I have a point. I have a
But
point.
these are all statutory functions like scrutinizer, form certification. These are allowed under the law itself. So it has to be read in that context.
Hey, Ankit, there's a one question. I have appointing Amit as a secretarial auditor. And then I'm giving all these certification works, scrutinizers are thing. So I will try to manipulate or something because I'm giving additional work to him.
No, I have a point. I
Depends
got your
whether
point.
Amitji can be
I,
manipulated
I have
like
I have a
that.
point in that case, because you may try to gain a benefit out of me, but because I am under the professional obligation also, being a member, when I am certifying the form, I cannot make a compromise with my duties when I am certifying my form and when I am issuing the audit report, right? Both of the functions are independent, and I have to justify the purpose for which I am engaged with the company. So in
And
any
for
case, there is no.
and both the things you are statutorily liable for the
Correct. I am
consequences. In
statutory liable for
advisory,
that.
you
Correct.
may not be statutory liable for the consequences, but because in secret scrutinizer form certification, you are statutorily liable for the consequences.
Absolutely. So there is no problem. Howsoever, maybe the company may be asking a favor from me, or it may look like that I am giving a favor, but it really has got no meaning. Now, as long as these are the statutory function, I don't see that there should be any. There is no question. I don't believe that there is a question of if somebody is not doing so, he is good governed. But if somebody is having a certification also that is not good governed, I don't think this can be a
I mean,
yardstick.
less for the audience point of view. Any work related to management, it should not be done. And all other statutory work you can do. That is the criteria. But when we will submit to the SEBI, we will push the point that please clarify this issue also.
Yes,
Okay.
that would be fine.
Yeah. Okay. Next question is, this is just a minute. Can you sum up the three RPT wholly owned subsidiary suggestion?
Wholly owned subsidiary, there is no suggestion for a.
No, I think the point that we discussed, the points that we were talking about now with regard to the wholly owned subsidiary has been incorporated, let us say,
Okay.
in the month of April, right? The consolidation will happen on 31st March 2025. And during the whole year, from April 2024 to 31st March 2025, whether you will consider it as the exempted related party transaction or it will be considered as a regulated related party transaction. That was the point, I think, that somebody is trying to understand.
Okay.
So whether, now, although Ankit has clarified, and we are also of the view that intent seems, the words used in the particular regulation are like whose accounts are consolidated and such with such holding company. So the intent is that have not been consolidated is not used. So past tense is not used. It is are being consolidated is the language. So it is fairly clear that if you have an intention and if you have a requirement that you will be consolidating, the exemption should be available. But we are seeking clarification on this particular point. And
Okay, now
the other point
we have to
was
go for Amit. We have to go, Amit, Ankit. We have to go to a rapid round because so many questions. SEBI should redefine subsidiary in LODR to include controlled LLP also. This is somebody suggesting.
No, that is already cleared in this definition itself, because subsidiary means company in which this is subsidiary holding whatever is written. In the last, it is written the expression company includes any body corporate. So body
Okay.
corporate is LLP, I think so.
Okay.
So there is no need to redefine.
Yeah. The question on signing partner shall arise only when the report is signed, and the information on partner shall be quite useful who has carried out the audit and signed the report.
this is a comment, I think, from someone.
Ankit ji, is the certification is allowed for secretarial auditor or not, that we have discussed? Okay. Better trust management with cross-check sufficient. Now, many transactions covered by e-invoice, digital TDS, GST, banking channel, company can be asked for provide confirmation from the payers, recipient. This somebody is suggesting, so absolutely right. Now the time has come, all these e-process, so many things are there. So the company can verify, you can't do each and every checking. Please provide clarification on delegation power to company secretary for transmission, transportation and name deletion case under Resolution 42, as in same has been deleted currently pursuant to amendment due to share transfer case deletion. This is connected to today's case?
No, it's not
Not
connected.
today's
It's
case.
earlier
It is
one.
largely
12
on
December.
account of the fact that now share certificates are not issued anymore.
Okay.
Yes.
Bhavik, Gala, you just talked this issue separately. Can you sum up this is there? XBRL filing content and disclosure parameter are not in sync. SEBI and Stock Exchange should take cognizance as lot of relevant information is asked in XBRL which are not applicable, and the explanation are required to be given by companies, which is creating a lot of rucks. Is
I
it?
think, yeah,
There is a
it is there.
consultation report that is also needed.
It is already there. I think in integrated filing, they are now revamping a lot of data which was obsolete. So we hope that in times to come, everything will be in sync with the regulation itself.
A simple example, like the secretarial auditor, they have added in the clause now, but in the XBRL, in the drop down, the secretarial auditor is still already there.
Already there.
Is long.
Already there. Okay. Giving opinion and betting may be conflicting of secretarial auditor.
Yes.
Okay.
Vetting तो होगा, opinions may have.
Opinion may not be. Opinion is the
opinion can be done, I think so.
Opinion is
Okay.
the independent exercise.
November 22nd, SEBI disclosure for audit committee approval application of cases for all RPT cases or only material RPT, all RPT cases.
But that circular is no more applicable. Now it has been subsumed in the master circular, but that is for all.
All the RPT.
If the regulations are in place, will it apply to the certification to be issued thereafter, or it will apply to financial year 2025-26 only?
So, like most of the other provisions are applicable from April 1st, 2025. This last date is 28th February. I don't think this would be for this financial year. Most probably it would be from next financial year only.
Next financial
I
year.
believe there was one webinar wherein SEBI officers were also there. I think that webinar was after 12th December
Amendments.
right? So therein they have indicated that they are in middle of finalizing annual secretarial compliance, and which is likely to be applicable for the financial year which is ending on 31st March 2025. So I am
Okay.
sure that they are going to come up with the notification very soon, and it will be the only very few changes are there. So I don't think there should be much of the difficulty, and they're intending that it should be applicable from this year itself.
Okay.
Okay. Now, this is on Secretarial Compliance Report, scope. Will the proposal inclusion of ASCR in annual report apply to all listed company, including SME or entities with minimal securities market exposure?
If
Sir,
you- if it is-
24A
How circular is.
24A doesn't apply to SME listed entities.
Okay.
Mm.
If the Secretarial's compliance certificate is included in the annual report, will listed entity shall be required to obtain separate certificate on corporate governance compliance that we have given?
That is not allowed.
Yes, already up.
Secretarial standard compliance with the proposed standard of Regulation 48, will compliance with Secretarial standard become mandatory for all listed companies now?
Not secretarial standards. Yes, sorry, SS.
SS1 and 2. But
SS.
that is also after the circular comes.
No, but Secretarial standard mean two standard as per law.
Yes.
Company standard is a guidance from the Institute of Company Secretary, so that is there. And I will tell you, by making this, because I was the chairman of Secretarial Standard when SS1, SS2 came, and Amit was also member. It is a very good piece of removal of dispute and simultaneously clarity on various issues which were open-ended since so many years. So
Yes.
this is a good part, and like notice should be of 7 days. Now how the notice will go. So we have explained in the Secretarial Standard clearly what is the meaning of notice. Is not sending, it is delivering also, and the delivering, how it will deliver, all these points has come. So it will be good. Now, impact of this non-secretarial compliance, non-compliance, what regulatory action will SEBI take if the practicing company secretary fails to explicitly confirm compliance with Secretary's law, this certificate? Will listed entity face penalty?
Violation of the SEBI Act itself, under which the LODR regulations have been issued. There are sections, I think by 11B, 11, there are
Correct,
sections.
correct.
They can debar also, they can tell them, and they can put this, send it to the institute also, send to NAFRA also, okay? Now, appointment of statutory and secretarial auditor. Qualification criteria for the auditor. The consultation paper proposed that the audit committee should review the qualification experience of the statutory auditor before appointment. Will SEBI provide a specific minimum qualification threshold for auditor of listed entity?
They have not done so. That is being governed by the Companies Act itself.
Okay. Amit, it is required?
Yeah, it is as Ankit is saying.
Madam, what do you say?
Yes, the same thing.
Okay. Nitesh, you have any view on this?
I think in the consultation paper they say that that you have to, while appointing the statutory auditor, you see the profile of the firm, whether they are commensurate with the firm profile is commensurate with the size and business of the company. Because many companies nowadays, a bigger company, I don't want to name, they have appointed small company, small firm having 10 employees and auditing the 10,000 crore revenue company. So which is not in the commensurate with the size. So on that background, I think SEBI has proposed this amendment.
This provision was already there in the Rule 3 to the company's rules. Unfortunately, that was not there in the SEBI LODR provision. Now SEBI is trying to create a sync so that SEBI regulation will also specifically talk about, and tomorrow errant companies can also come under the radar of SEBI violation. So they can be penalized. I think that is the idea.
Okay. Okay. What additional disclosure are proposed for secretarial auditor appointment? Will SEBI mandate a peer review certificate requirement for secretarial auditor similar to statutory auditor?
It is
That is
already
already
It's already there.
It is already there. But do you think that clearly mentioned, or there's some confusion?
No, there is no confusion.
Clearly says.
Even for unlisted entity, you cannot
Yes.
do a secretarial audit unless you are peer reviewed as on date.
Okay. Do you think peer review is very effectively running in India when you are?
As far as the concept is concerned, concept was very nice. I think maybe it requires little bit of improvement in its execution. There is no denial. Concept wise, it is a very nice concept that you learn from your peers, the person not only who is being subjected to peer review, but the person who is undertaking a review also learns a lot in this whole process. But I think execution certainly requires a lot of new innovations and conceptualizing how the things can benefit each other. I think
Okay.
that certainly is a requirement of time.
Okay. The resignation of the auditor. The paper proposed treating the resignation or removal of secretarial auditor as a deemed material event. Will this apply to all auditor resignation or only when resignation is due to non-cooperation and governance concern?
In all cases.
All change. Whenever the change is there, then it is applicable.
So in all the cases, if he's resigning, because you have to write the why he's resigning. Okay.
Appointment or change for
Change.
any reason whatsoever will come under the disclosure norms. You will have to disclose.
Okay. Mandatory fee disclosure for secretarial auditor. The consultative paper proposed mandatory disclosure of total fee paid to secretarial auditor in the annual report. Will this be aligned with the statutory auditor for fee disclosure, or will fees increasing require justification?
If fee increase justification is required at the time of appointment, not during the tenure. And the disclosure is on the lines of the statutory auditor in terms of the statement.
So
Yeah.
whether we need to fix the fee for full tenure, or is it for the first financial
Even
year
I
with
don't think the fee is
with the power to
required. The fee is not required in the resolution. That
No,
is
no, but
on the similar lines
explanation.
with the
Correct.
statutory auditor.
maybe the explanation requires.
Yes.
Even-
Explanatory statement is
And
required.
even
Yeah.
for it's on the similar lines what we do for the statutory auditors.
Okay.
Do we?
Yeah.
Yes, sir, please. Do we?
Yeah.
Yes, sir. Do we need to
Not for the
fix
entire
the fee
tenure.
for the
No.
entire tenure?
No. Power is
No, but-
given to both.
But you are appointing them for 5 years, na? So you
Yes.
have to disclose that whatever fee you will be paying or you paid or some increment.
As the statutory auditor fee is done, what the shareholder does, they delegate the power to the board of director, and
board.
board of director decide the fees.
So initially you will disclose and then you will give the
Yes.
power to the board.
That is how the industry will function. Otherwise, you don't know, you can't predict the future. Now, in 3 years' time, what the size of the company will be.
Yeah.
Okay. Now the paper proposes to standard format for disclosing auditor's appointment to shareholder. Will the format be prescribed by SEBI, or will companies be allowed some flexibility based on industry practice?
That is already prescribed in the
Right.
paper.
Okay. Regulatory oversight on compliance with secretarial standard. The consultative paper proposed making compliance with secretarial standard mandatory. Will SEBI introduce specific enforcement mechanism for secretarial standard violation similar to penalty imposed for financial reporting lapses?
I think certainly, yes, they are already having the powers. Slowly, gradually, they are standardizing their penalty system also. So very soon, we will see the lapses on these account also, and penalties will be invoked.
That is why it is included in the compliance framework.
Yeah,
The specific, that's why it will be there going ahead.
Regulatory framework for imposing penalties will evolve over a period of time, I think, as it has evolved for the other sections and regulations.
Okay.
Yes.
Implementation timeline for new secretarial compliance on auditor appointment rule. If the proposal are approved, what will be the transition period for listed company to comply with the new secretarial compliance certificate and auditor appointment and RPT approval rule?
I think it will be immediately applicable once the circular comes.
No, but they will give some time to.
Or as far as secretarial auditor appointment is concerned, I think the 12th December circular was also saying auditor appointed for financial year 25-26 onward.
Yes.
The provisions will be applicable. So
Yes.
even if it is made applicable notified prior to that also, it will be applicable only from 1/4/2025.
Right, yes.
As far as RPT is concerned, I think while notification, they may come out with the specific date. Otherwise, that particular provision will come into force at once they are notified.
Okay, will any relaxation or phased implementation be provided for SME listed entity, especially for audit and compliance disclosure?
SME listed entity, I think there is a separate consultation paper mooted wherein they have proposed the inclusion of compliance of corporate governance, which was up till now not there. That is why I think Regulation 23 has also been amended to include the provisions with regard to SME listed. So I think they will come up with the framework in which the listed entity will, the SME listed entity will be required to comply. So
Okay.
far, I think because that paper is itself, separate paper is there now, on which SME governance compliance will become applicable.
No, they say कि SEBI will identify some governance norms and they will create a separate chapter for the SME, the governance norms applicable to SME.
They
So
will
they
be
will
culled
come
out
out.
from, yeah, they will
They
be
will-
culled out from chapter 4 only, but there
Yes.
will be little
They-
left, like RPT
Yes,
provision will be
yes,
mandatory.
yes.
Likewise, some independent director provisions are going to be mandatory, but still, I think that is at a mooting stage only.
Yes.
Okay. Alignment with MCA NAFRA rules regulation. How will these proposed changes align with existing MCA, ICI, and NAFRA regulation on auditors' appointment and secretarial compliance? Will SEBI collaborate with these regulatory body to avoid overlapping of compliance?
Sir, there is no overlapping of compliance.
Okay. Three small RPT question. Quickly, just give answer. Materiality threshold for subsidiary RPT. Will this
There is no
threshold?
concept of materiality threshold for subsidiaries. There is only one materiality concept, that is material party transaction, that is 10%. There is a concept of approval of related party transactions undertaken by the subsidiary, which requires approval of the audit committee of the holding listed entity. In that case, the threshold is 10% of the standalone turnover, 1,000 crores, 50 crores, in case of main board or SME listed company, whichever is lower.
Okay. Approval of RPT for subsidiary without financial track record.
That is also there.
It's already
10%
given.
of the net worth or
Okay.
1,000 crores, 50 crores.
Clarification of related party subsidiaries. The paper suggests clarifying the related party subsidiary should be identified as per Regulation 2(1)ZV of SEBI LODR. Will SEBI provide further guidance on transactions between multiple subsidiaries and the same listed entity?
Why that needs to be provided? I think that is already covered.
No, I think his
Already
question is
there.
on, no, his question is on 23(1), the material related party transaction, whether transaction with multiple subsidiaries will be included in that threshold or not.
Between two normal
Two or more.
subsidiaries of a listed entity.
So related party is on one hand and multiple subsidiaries are there on the other hand. So whether 1,000 crore limit will include the transaction with these parties or not. Like suppose a listed entity is doing a transaction with X1, which is a subsidiary, which is a related party. Then there is a entity A1, which is a subsidiary of A, doing a transaction with X. Likewise, all
But
these.
they all have to be dealt separately. It is party wise.
Yes, related party wise.
It is party wise.
Okay. Exemption for wholly owned subsidiary. How will the impact unlisted parent company with listed subsidiary that currently enjoying exemption?
Can you repeat again?
Yes.
The transaction between listed subsidiary and the unlisted holding company.
Listed
Sir, I don't think there
subsidiary
is an
and
exemption that is available.
no, it's not available.
Now
Holding
it is not
company.
available. That is why they have added the word listed therein. Now exemption 23(5).
Yes.
Now it will not be available. Up till now, that exemption was available. But once this notification is notified, then exemption will go.
Okay, okay. So let's some more questions has come. SEBI notification of ESG disclosure requirement for financial year 25-26 and limited assurance for 26-27 deferment in BRSR, which has already approved in SEBI press release, still pending, just 2 months left for financial. Madam, I think Bhavik, these are the questions which are not relevant for today's topic. Will not give answer, please. Okay, don't ask these questions for merger transaction should be out of the SEBI RPT domain as been like to the MC as well.
Sir, there
SEBI
is already a clarification, I believe, from SEBI by way of informal guidance on the merger transactions.
Okay. SEBI notification for ESG disclosure deferment. This is also same. Is it the size of a firm that matters or the expertise of the CS concerned matter to do the audit? But how you will identify the expertise of somebody unless you are giving. So prima facie, when the board will decide, they will decide on your basis of your experience, past experience, your work and your client. So, and the team also sometime. So that point is you have to do in quantitative terms only.
And in any case, these are objective parameter, and audit committee and board has been given still a freedom to appoint anyone by having a reasons recorded in writing in their minutes. Where is the problem? But yes, these are the parameters which are required to be placed before the audit committee for their evaluation.
Okay, okay. Is controlled LLP subsidiary company can holding company grant ESOP to employee to controlled LLP asking LLP does not satisfy voting power board? I don't think this is also relevant for today's topic. All these people, those who have a different question, please send it to separately to us. We will give answer. It is implied that SS is applicable since every listed company is a company first. Why a requirement to say so?
It is, I think, basically
Not
to
required.
extend it to the body corporate. That would be the only.
Because
Yes.
Companies Act is talking about SS is applicable to company. That's why this issue has come.
No, but the fundamental reason why they have added is because of the fact that the annual secretarial compliance report talks about a certification from the company secretary that the secretarial standards have been complied with.
Okay. If the regulations are in place, will it apply to the certificate to be issued thereafter, or it will apply to financial year 25-26? I think this question can write it that SEBI should give some clarity on this. Okay. November 22nd, SEBI disclosure for audit committee approval applicable to cases for all RPT cases or only
Okay, already.
Okay. So all these questions has done. I think there are some issues, Ankit and Amit and Madam and Nitesh, which we have identified. There is a gap. The secretarial compliance remained a post facto compliance tool without real-time accountable mechanism. That is one. I'm just giving some thought. Audit committee do not have mandatory review role in secretarial compliance, reducing its oversight impact. Is it correct? Or they have to put it, because that is not the intention. If they are putting everything with secretarial auditor equivalent to the statutory auditor, they have to do something on this. Duplication of certificate with governance certificate under LODR regulation. We have given answer. Okay, but this thing is silent. So they can give that now you are giving this certificate that include all other certificate is not required. Okay. Please share a copy of presentation that we'll send it to you, sir. We'll send it to everybody. Appointment Secretarial Auditor financial 26 should be done in first quarter of 26 or last quarter of financial 25. I think they can do any, there's no restriction. 25 you can do.
They have to take it in the approval in the annual general meeting.
AGM,
So
so
it will
have
be
to plan
done
it
that way.
accordingly.
Okay, so these points which I mentioned, mandate corrective action timeline in compliance certificate for non-compliance before submission to SEBI, require audit committee to formally approve this secretarial compliance before submission, and clarification regarding this overlapping that what you have to give, what you have not have to give. Then there is some appointment issue which are gap, no clear minimum eligibility standard for secretarial and statutory auditor. no rotation requirement for secretarial auditor, increasing risk of familiar bias. Though you are mentioning, but Amit, this will apply mutuus mutandi, or this you have to specifically mention?
As far as rotation is concerned, so far it is not applicable because 139(2) is specifically applicable only on the statutory auditor. So if at all tomorrow regulator thinks, and because we are in a very nascent stage, it's only hardly a decade has passed with regard to the secretarial audit. I think time will come when the government will also moot a concept of rotation, of compulsory rotation of a secretarial auditor in a big listed entity or in a company where the public interest is involved. I think.
Okay, lack of restriction on non-audit fees, which may compromise auditor independence. So cap non-audit fees, limit non-audit service to 30% audit fees to prevent conflict. Something can be worked out.
I
Nothing
think
specific.
these parameters cannot be benchmarked because each case will be different, and I think the industry will face more problem than by prescribing. So these kind of yardstick which may suit to one particular requirement or situation should be avoided, I think.
Okay,
And regulator should not be such prescriptive also.
okay.
But sir,
Mandatory.
in the disclosure norms, in the secretarial standard, they say you need to mention the group company, consolidation basis while appointing your by the shareholder. If you are anything earning beyond 10% of your total turnover.
Okay.
So
It is a disclosure only.
it is like it is you are giving to the shareholder whether you see it as a conflict of interest because material revenue you are generating from a particular
Particular
company
group.
or its group company. So I think it is the shareholder who will decide whether it is a conflict on the part of the firm and the company or it is not, or it is in their
Okay.
whatever they
Now,
decide.
few more suggestions which is there. Real-time compliance monitoring system. This is one point. SEBI should also suggest companies, or company should also work out, or institute should suggest. One is mandatory impact assessment for new compliance rule. Now, today, what is happening after CSR successful implementation of this impact assessment? Here should also come something like impact assessment, because I'm taking certificate, but what is the impact on this? That should also be there. Enhanced whistleblower protection for compliance officer. Now, strengthening legal protection for compliance officer for routine, like madam is there and now she has to, if she's making something, because sometimes there is a compliance officer is more responsible. So the whistleblower policy should also be very strongly connected to this. Earlier, it is there, but this point should also be. Then penal mechanism for repeated non-compliance. Those who are violating this compliance certificate, they should be penalized for this. So now it's a time to close. We have already overshoot 6 minutes. As we are doing this as a ritual, I will ask 30 seconds to everyone about this. So Nitesh, I will start with you. These changes, what is your view? And before this, I'm just giving the result of poll. Do you agree that revised annual secretarial compliance is proposed in consulted paper? Strongly agree, neutral. So majority is in favor of agree and strongly agree. So this is okay. Next. Should the annual compliance certificate be disclosed as a part of annual report to be listed entity? Yes, that is also strongly and agree. That is also there. Next. Do you agree that proposal of include change or resignation of secretarial auditor as a deemed material event under schedule 3743? That is also majority people are agreeing on this. Next. Do you agree with proposal of mandatory disclosure of total fees and the change secretarial auditor if any during the financial year? That is also 70%, 75% people are agreeing. Next. Do you agree the proposal of mandate disclosure of minimum information to audit committee, board of directors, shareholder at the time of appointment of reappointment of statutory auditor or secretarial auditor of the listed company? That is also 75, 80% people are saying yes. In case of RPT undertaken by subsidiary of a listed entity and where the subsidiary has published financial statement for at least 1 year whether a monetary threshold should be specified as proposed in the addition to the existing percentage-based threshold of 10% or standalone turnover of the subsidiary for approval of RPT for audit committee of the listed entity. That is also 70% people are agreeing. Next, I think these are the poll, and these are the poll is questions which SEBI has asked. Okay, so Nitesh, your turn to
Very interesting observation that almost in all the proposals what the SEBI has asked for the first time, I think strongly agree or agree is around 70% or more.
Yeah, you are
Right,
right.
Panga.
Yeah.
So,
So
yeah, sir. Thank you. Thank you. Sir, in my view, the SEBI has taken a step in the right direction by removing the duplication of certification, because by removing all and clubbing into the one, which are the same thing. Because earlier when you do the annual compliance certificate and then you provide another certificate, then you cannot make any statement in the terms of remarks, because you have already given an annual compliance certificate.
let me second,
So
Nitesh,
yeah,
let me
yeah.
second.
And also I'm in favor of that. They are the SEBI is treating the secretarial auditor in par with statutory auditor, and also I'm in favor that audit committee or the board and the shareholder will look into the size and business of the company while appointing the secretarial and statutory auditor. And also we are also in line with the proposal that the partner's profile would be there, so that expertise will be built within the organization of a firm, whether that company is that firm is very much expertise in some sectors.
Okay, Nitesh.
Yeah.
So Amit.
So I think I will only reiterate to say that I am very happy with the line of changes SEBI has taken and the way they are coming up with their consultation paper. I think one thing which I am now very hopeful is we can see a concept getting fructified in form of a integrated non-financial reporting, which will take the governance to the next level in times to come. If it is actually in a position to be implemented, which I can say with my experience, the way SEBI is thinking, the way they are synchronizing, the way they are integrating, I think time is not far when they will itself mandate that you have to compulsorily do a integrated non-financial reporting in a particular format.
Okay, Ankit.
सर सब बढ़िया है.
Okay. Madam, your last comment.
Yes, sir. Actually, I agree with Damit and Ankit and Nitesh also that this proposal are good when your duplication is being removed and a single report should be there. Just like Amit sir has said that it should be non-financial single report that should be there, because secretarial audit and ASC should also be merged in one report only. And the auditor and whatever auditor, statutory or this secretarial auditor, it should be should have the proper expertise that is commensurate with the size and the complexity of the organization. So that is required. So these are the welcome move which are we are receiving from SEBI. But one thing is that all these every time some consultation paper, every month something is coming up. So that should be should be done in a consolidated manner, because every time we are because on the 12th of December itself we have seen the new circular, and now again we will be this is something will be expected in the month of March, which has to be complied for the financial year. So that should be consolidated and reduced. It should be done in a consolidated
You're right,
manner.
because law is evolving and people are at the hem of the affair. They want to do something different. So this is happening. So thank you very much. Thank you, Arna Madam. Thank you, Amit. Thank you, Ankit and Nitesh for participating, giving answer. It was a lively discussion which we have, and we have discussed around 55 questions on various issues. Even questions are still coming, but now these questions will give answer to them separately. Okay. So the best part is that when you have a lively discussion, and now we are consolidating suggestions. Amit has given a good suggestion on non-financial. I request him to share a concept note. We will pass on to SEBI, and we will compile all these points which are there and the question which people have asked and we have given answer. It means there is a gap of understanding that clarity can bring. Word clarity can bring lots of things. That this certificate is required and superseding all other certificates are not required. I think that will give more clarity and more confirmation. People will not be confused. This is the purpose of law. So with this thing, I thank everyone, all my participants, those who have come, those who have asked questions. We received 55 questions. All we have given answer. With this, thank you very much. And as you are aware that our journey of knowledge sharing will continue, and we will select topic of topical interest, urgent, not the reactive but proactive, and something which is industry should know, and industry is confused and they have multiple questions during that time. So next we will do direct tax, income tax act, which finance minister has placed in the parliament. We will discuss on this issue and we'll call the best people from the industry. Till then, thank you very much.